Hello everyone. Tesla's latest pricing strategy is shaking up the EV market, and Onvo and Nio are feeling the effects. Today, we'll look at registration numbers, production challenges, and the race to stay competitive in China. So guys, today, we need to dive into some crucial updates, starting with insurance registrations and Tesla's strategic moves in China, which could profoundly impact both Onvo and Nio. Let's unpack this, but first, let's break down the registration numbers from last week. Nio recorded 4K new registrations, a number that might not seem extraordinary, especially when compared to Zeekr's 6,200 or XPeng's impressive 7,200. It's worth noting that these competing vehicles are generally more affordable than Nio's offerings. However, I still consider 4K registrations a reasonable figure, especially given Nio's recent decision to scale back on buyer incentives to maintain better profit margins. On the other hand, Onvo is lagging significantly with just 1,300 registrations last week. This number is far below expectations, and it's concerning, particularly with reports of customers canceling orders. The main issue here: Onvo's inability to deliver vehicles before the year ends, which is crucial for buyers looking to benefit from local government subsidies that expire in 2024. Customers who don't receive their cars in time are walking away, and that trend was confirmed during Nio's recent earnings call. The CEO emphasized the urgency of ramping up production and deliveries. If Onvo hopes to stay competitive, it must hit at least 2K registrations per week soon. Now, let's address Tesla's bold move, which could disrupt the market. Just yesterday, Tesla announced a direct 10K RMB discount on the Model Y in China. In addition, they're offering 5 years of 0% interest financing. These incentives make the Model Y incredibly attractive. Customers can get one with a 79K RMB down payment and pay just 2,600 RMB per month for 5 years, interest-free. This strategy makes Tesla's vehicles more accessible to a wider range of consumers. Unsurprisingly, the Model Y has been a consistent bestseller in China among vehicles priced above 200K RMB, while Onvo's L60 might outperform the Model Y in almost every technical aspect, including price, energy efficiency, and interior space. Tesla's aggressive pricing and incentives create an undeniable advantage. The Model Y remains a favorite not because it's technically superior, but because it's more affordable and supported by attractive financing options. This pricing strategy, often referred to as a price war, has become Tesla's signature approach. While it may irritate recent Model Y buyers who missed out on the discount, it undoubtedly boosts sales. Tesla's tactics leave competitors, including Nio and Onvo, scrambling to respond. The key question now is whether these brands will follow suit by introducing their own incentives to retain and attract buyers. Nio, however, has already ruled out significant incentives. The CEO confirmed the company's priority is improving margins rather than competing on price. Onvo, on the other hand, faces a tough dilemma. Many customers are still awaiting deliveries, and lowering prices for undelivered vehicles would be unfair to those who've already committed to a higher price. Onvo is in a tight spot. It needs to maintain profitability while also delivering vehicles promptly to avoid losing potential buyers. Adding to the complexity is Tesla's upcoming release of the Model Y Juniper, a refreshed version of its flagship SUV. The current Model Y, despite being a 5-year-old design, continues to dominate sales. The Juniper is expected to bring improvements in energy efficiency, interior design, and storage, potentially nullifying some of the advantages that Onvo's L60 currently holds over the Model Y. This makes it even more critical for Onvo to accelerate deliveries and maximize sales before the Juniper hits the market. The Onvo L60 has significant strengths, such as its lower price, roomier interior, and advanced energy efficiency. It's also supported by the battery as a service BOS model, which further reduces the upfront cost. The L60's starting price with BOS is just 149K RMB, making it a viable option for customers who might not be able to afford the Model Y. However, affordability alone might not be enough to withstand the competitive pressure of Tesla's refreshed offerings. Tesla's incentives undoubtedly shift buyer attention, and some Onvo and Nio customers may already be considering switching to the Model Y. This shift is particularly concerning for Onvo, which is still ramping up production. If Tesla continues its aggressive pricing strategy, Onvo will need to explore alternative ways to attract buyers, possibly through 0% financing or other promotional offers once it resolves its production backlog. It's also worth noting Nio's unique approach to retaining customer loyalty. Despite scaling back on free battery swaps to reduce expenses estimated to cost $200 million annually, Nio still offers limited promotions, such as its recent 10th anniversary loot box campaign. Select customers can win up to 10 years of free battery swaps, though this isn't a widespread incentive. While these efforts help maintain customer satisfaction, they're unlikely to drive the same level of sales as Tesla's aggressive discounts. Looking ahead, Onvo faces a significant challenge, fulfilling orders quickly and efficiently. Its current backlog and limited weekly registrations put it at risk of losing customers to competitors. If Tesla's Model Y Juniper delivers even modest improvements, it could siphon off more potential buyers, especially if Onvo fails to meet delivery expectations. Despite these challenges, Onvo has one significant advantage: its positioning as a mass-market brand. Nio, by contrast, remains a niche luxury player. In theory, Onvo should eventually outsell Nio, given its broader target audience and more affordable pricing. For this to happen, Onvo must prioritize ramping up production, fulfilling orders, and implementing competitive promotions to retain buyer interest. The recent insurance registration numbers provide a snapshot of where these brands currently stand. While Nio's slight decline reflects its focus on margins, Onvo's gradual growth is a step in the right direction. The ultimate goal is for Onvo to surpass Nio in sales, fulfilling its role as the more accessible, mass-market alternative. The road ahead is fraught with challenges, especially as Tesla continues to disrupt the market. Still, if Onvo and Nio can adapt to these changes strategically, they stand a good chance of maintaining their competitive edge in the ever-evolving EV landscape. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.